Hi, I'm Urmi Desai, editor of MoveSmartly.com, and this is a Move Smartly show. Our episode this week is our monthly Q&A with my co-host, John Pasalis of Realosophy Realty with me here in Toronto. Hi, John.
Hello.
So every month we take questions from our viewers and listeners about all the moves they're thinking of making or in the midst of making in the real estate market across the Greater Toronto area. And this month is no exception. We've got a bunch of new questions in, and yeah. So, are you ready, John, for me to
Ready to
fire
roll.
away?
Let's do it.
All right. Well, just a reminder before we get started that everybody watching and listening can ask their own questions at askjohn@movesmartly.com. And as always, if you enjoy listening to our show and find it informative, please take the time to like, subscribe, share it with a friend, or write a positive review so that more people can hear about the show. And as always, we appreciate your support. All right. With that being said, let's get on to the show now.
All right. Let's hear the first question.
All right. So, our first question. Hi, John. We currently live in a two-bedroom condominium in Toronto that we own, and we also own a small one-bedroom condo that we've been renting out. We are expecting our first child, so we would like to upsize to a three-bedroom house. We need to sell one of our two condos in order to afford to buy our next home. The tenant who was living in our rental condo vacated a few months ago, so we put up that unit for sale, but it's getting very few showings and we haven't had a single offer. We were hoping to sell that unit so that we could start looking for our next home as soon as possible, but now that it's not selling, we feel stuck. We
Mhm.
could list the two-bedroom condo we are living in for sale, but we are worried that we'll feel pressure to buy quickly if it does sell. What would you recommend for someone in our situation? Thank you, Elena.
Yeah, that's such a great question. We actually had a client of ours recently in a very similar kind of situation. Um, what's happening right now is the reason this situation, of course, is challenging for people is that the small condo market has stalled, right? Normally this wouldn't be an issue for many people because they would just list their small condo for sale, it would sell, they move on, they buy their next house. Everything is easy. And today, it's not as easy. We're very used to in Toronto thinking that you list a property for sale, it sells in a few weeks or a month. We're not used to an environment where you list a small condo for sale and it's on the market for 3 or 4 or 5 months without selling. So this is really, I think this is a situation I think that many people are finding themselves in today. And there's no perfect solution to this, right? I mean, you have a few options if you're in this situation. I mean, the first, of course, is you have your small condo on the market for sale. I mean, maybe one of the reasons it's selling is because the price is above what the market will say it's worth. So, one option is you just have to reduce your price if you want it to sell more quickly. This is a challenge for some people, again, because they look at sort of the peak prices. They'll go lower. Most people will go lower than the peak, but they won't go too low. They don't want to feel like they're going to fire sale it. But again, this is a personal decision. Okay. Even if you sell it for 10 or 15 grand less than what you thought you'd get, or 20, does it help you in this next move? Does it make it a smoother transition? Have you still made a capital gain rather than a loss? All of those things matter. So one option, of course, is just to reduce the price and try to make it look more attractive. And again, for those who aren't following Toronto closely, the reason the small condo market is very sluggish is just because those are usually investor-driven units, and there's just not a lot of demand from investors these days. There's not a ton of demand from end users, but also not a ton of demand for investors who are buying some of these smaller units. So, option one, of course, is just reducing the price and selling that. Now, if we don't want to do that, or if they don't want to do that, and they rather just not reduce it too much and effectively rent it out and wait for the market to recover, that's a strategy that some people are taking. We had a client who did something very similar. In terms of how they proceed from here, I mean, well, then your other option is to potentially sell your current two-bedroom condominium, right? And in this, again, in this environment, typically, like, people in the past would normally just go out and buy the home that they want, the three-bedroom home, and list a two-bedroom condo for sale. But again, it's a very uncertain market. There's so much risk in doing that today because You don't know, even though the two-bedroom condo market's busier than the micro condo market, it's still a lot of uncertainty. Like, in a lot of cases, even when someone has a single family home, there's still a lot of risk in buying and then selling. Because even if you're priced well, there's just may not be a ton of demand. So it's not even about your pricing. It's a slow market. And in a slow market, homes don't sell in 2 weeks, they sell in 3 months, right? Um, and the challenge is if you've bought a home and you need to sell, you can't wait 3 months, right? So probably the more prudent approach would be to probably go out and rent. You know what I mean? Like move if you generally want to move out of your condominium, or list your current condominium for sale first, I should say. Um, you know, get that sold, and then you are either trying to find a home to buy if you think you can buy one relatively quickly, and if you can't, you just have to rent in the interim, right? And that's kind of basically the different strategies people can take. And it's not ideal, obviously. People would like to know where they're moving to before they sell their home. And if you want that, then yeah, maybe you just go out and buy and say, okay, I'm going to rent for 12 months while I'm selling my current condo. And then the reality is like 9 months or so into your lease, you can start looking to buy, right? Because you're going to have the 60 to 90-day closing. You're going to have some overlap. So, yeah, you might have to rent for a year. But again, this is like in this environment, it's better to take safer steps rather than riskier steps. And again, these steps, buying first and selling was not riskier 2 years ago because everything was selling in a week. You know what I mean? But we're not in that environment anymore. So you have to proceed a bit more cautiously to mitigate your risk. And if the downside is you have to rent for a year, I mean, I've done that. So it's not the end of the world if you want to kind of be conservative with your real estate decisions.
Right, but definitely trickier. I mean, hopefully that helps Elena. Renting, of course, when you have a family, maybe a little bit trickier or you're expecting, but it's the movements people want to avoid. But as
Hmm.
you're pointing out, this is the new reality, which we have
Hmm.
not been used to in the Toronto area real estate market. Demand is way down.
Hmm.
And that just means across both classes, especially investor have dropped out of the market and end users. So you can no longer bank on some of the quick moves that we've been really used to.
Yeah, and on our live update, we talked with Gus and Davin from our team. We talked about this specific issue. I think Gus brought it up, how this is kind of freezing the upsizing market a little bit because again, like people who are upsizing were very used to buying the home that they're moving into, then selling their current home, right? And in a very uncertain environment, people are reluctant to do that, right? Because they don't know when their home's going to sell. They don't know how quickly it's going to sell. They don't know at what price it's going to sell. And this leads to a ton of uncertainty for people who are upsizing, and upsizers generally don't want to sell their home, the home that they've been living in for 5 or 10 years that they've settled into, right? And then move to a rental to eventually buy their long-term home. Like that as well is like a very emotionally challenge. You know what I mean? Most people don't want to do that. They'd rather just buckle down into their family home until they know they can afford the next home they want to move into. So this slowdown is kind of really putting the ice on this upsizing segment of the market. Obviously, it's not just that, it's high interest rates, high costs as well, but certainly this uncertainty, which is kind of new for Toronto, is pushing a lot of people to the sidelines.
All right, so some tricky decision making. Hopefully that helps, Elena. Question two actually might be uh, related. Actually, it's a bit different, but it's on the issue of condos. So,
Mhm.
question two. Hi, John. I hope you're doing well. Thank you again for very helpful webinars on real estate. I missed attending your live market update, but I will watch the recording. I was wondering if I could still ask you my three questions below. And I'll ask them because they're linked all at once, John, and then have you respond.
Sure.
How much on average does a new condo in Toronto depreciate each year if it's rented versus not? How much approximately should one expect to pay for repair and maintenance every year for a rented out condo? To sell a condo in Toronto, should we list now or later in the spring?
Hmm.
Many thanks, Gail.
So when they ask how much does a condominium depreciate if it's owned or rented, um, it's hard to, I don't know 100% what they mean. So, I mean, one is, of course, do they mean condos depreciating overall rather than appreciating in value? I don't think that's what they mean. I think they mean, the depreciation and sort of the wear and tear of the unit, perhaps, is what it sounds like. And I think that's what they mean because they're saying basically, does it depreciate more as a rental property versus if you kind of own or occupy it, right? And that's a very hard question to ask because um, it depends on the tenant, quite frankly, right? I mean, you have some tenants and they maintain the property beautifully, and the finishes are great and everything's in very good condition. And then you have other tenants who you know, they come into the condo with their dripping wet, salty boots onto the hardwood without a mat. And then, like, after a year, all of the hardwood's been destroyed, right? Because they don't care and they don't think about what that's doing to the flooring, right? Or they don't look after the cabinets and the finishes. So it's very, very hard to say. Like, you can't put a number on that. You need to be very careful about who you're renting to for those reasons. I mean, in some cases, units end up being destroyed, if you have the wrong tenant in there. And it's very hard to recover that money by chasing them after the fact, right? So again, flooring destroyed if they start smoking in the unit, if they have a pet, they damage the cabinets, they're scratching the cabinets, you have to replace your kitchen. All sorts of things can happen. And I think if you're in that situation, you just need to be very careful. So there's no rule of thumb in terms of depreciation due to wear and tear. The question about repair and maintenance, I mean, quite frankly, there's very little. I mean, condominiums, that's why you pay maintenance fees. I mean, the maintenance fees usually cover most of the things that need to be maintained. It does not cover any maintenance in the unit, but there's very little to maintain in the unit, right? Like, the plumbing is central. Like, you're not going to have many issues as an investor in terms of maintenance and repairs. Like your
What
toilet
about
breaks. Go
what
ahead.
about John, appliances?
Mhm.
Maybe if you're the owner, you might live with a rattling appliance or something that's less than perfect. If you're renting the condo out, do you face more restrictions or rules around having to replace things, or even just making sure your tenant stays happy?
Well, yeah, I mean, your appliances should be working. Like, if you're, like you said, like an end user owner, maybe you don't care that one of the elements doesn't work on your stovetop, right? So yeah, you have to repair that. But again, that's a relatively minor fix. Usually, you replace a stove is the worst case scenario. It's not a ton of money. These are like one-time costs that the value extends beyond the 1 year. It's not just a repair. Like, you're buying a stove, right? It's not like a maintenance issue. So again, those don't happen very often. So normally with condominiums, you generally don't have a ton of repair and maintenance day to day, which is one of the reason why many investors invested in condos, quite frankly, because it's very different from owning a home. Like, owning a single family home, even if it's a multi-unit home as a property, you have roofs that need to be replaced. You have, potentially plumbing issues. You have, like, a basement all of a sudden that's leaking and you need to repair. Like, there are all sorts of things that can go wrong. And again, when those happen with houses, usually ahead of time when you buy them what needs to be repaired. Usually they're big capital expenses. And those, again, have a 15-year lifetime, for example. But at the end of the day, you still got to cut a check for 10 grand to replace your roof one day, right? So it's obviously harder for some investors when you have to have these lump sum expenses for fixing them. But aside from those big expenses, houses in some ways are very similar. Like, you're not replacing your, toilet or fixing plumbing that often, even in a single family home. It's the bigger repairs that kind of weigh on the maintenance of a single family home when compared to a condominium.
All
And
right.
there's the last question. What was the
Yes.
last question?
To sell a condo in Toronto, should we list now or later in the spring?
Oh man, who know? I mean, who
The
knows? At the end
million
of the
dollar
day,
question.
yeah, it's very hard to say because, again, I don't know how the market's going to evolve over the next while. If you have again, a larger condo, they're doing a little bit better than the small ones. But again, I mean, I think you just sell when you need to sell, when you want to sell, when the timing's right, rather than trying to time the market. Like again, January is typically a competitive time, and this is why like you can't time the market. Like usually January, February are among the most competitive months because, and we've talked about this, I think, on the show, maybe a few segments where this is when usually most buyers jump into the market and they're the fewest listings, right? It is not a very competitive time right now, partly because our starting point from December was a lot of listings on the market, which is different from previous Decembers. And on top of it, demand's not that insane, right? So even though normally we'd say January, February is a great time to list because you tend to get more bidding wars and it's more competitive and all of these things, it doesn't apply this year, like for different reasons, right? So I wouldn't necessarily try to time the market because you can't predict where things will be. We don't know if things are going to be economically in the next 6 months with, the US administration, potential tariffs, a federal election. Like there's so many things going on that you can't possibly predict where the market's going. So you just list when you need to sell, basically.
But it seems like what you're saying is the importance of knowing how the market's behaving around the time that you are thinking of listing becomes the crucial thing. And Gail mentioned our live monthly update. You do that
Yeah.
every month on our YouTube channel. Is also a broadcast on our podcast as well, where you talk to your fellow agents in the office, also mortgage experts, about what exactly is going on in the markets at that moment. And it
Yeah.
sounds like that's what you need to do rather than thinking there's a hard and fast rule that the
Yeah.
spring market will be busier at this point because we're not even in a normal situation that we've seen in the last few years, and B, there's so much uncertainty as you pointed out.
Yeah, exactly. And I think you touched on it. You're right. That's why we do those live updates primarily because it's important, I think, for people who are buying and selling, and I think that's mainly who are on those shows to understand the current dynamics that are going on in the market, right? And like I said, we talked about it on the show. Like you normally January's busy and it's not right now. Like it's a little busier, but it's not a overly competitive market, right? And I think again, this frames how you think about things as a seller, as a buyer, how you approach it, how you approach your pricing strategy, right? Do you price low to get multiple offers? Well, if it's a slow market, that's less likely to work out for you, right? So it's important to understand kind of the dynamics going on at the time before you obviously buy or sell.
All right. So hopefully that helps, Gail. And for our final question, I think you've started talking a little bit about condos versus houses as investments. And our
Mhm,
question three touches upon this and
mhm.
with a little bit a newer twist, something we're
Okay.
starting to see in the Toronto market. Hi, John. I'm a member in several investment focused Facebook groups, and I've seen several people discuss how they are buying single family homes in Toronto and converting them into a fourplex with a laneway house in the backyard, converting one home into 5 unit living units that could become rentals. With the condo market cooling down, this looks like a far better way to invest in real estate and generate more value and returns while also creating new housing. How do you feel about this type of investment? Thanks, learner.
Mm.
And John, we should preface that this is due to some policy changes that we've seen in Toronto and across Canada to allow more density,
Yeah.
right? So this is why this trend is starting to be more talked about. Is that true?
Exactly. I mean, in particular in the city of Toronto. So the city of Toronto has basically legalized fourplexes anywhere where there's a residential home. So in the past, in most of the GTA, and sorry, not the GTA, most of the city of Toronto, that was zoned residential, it was single family residential. In most cases, it was only a detached home. In other cases, it allowed semis as well. And what has happened over the past, I can't remember when they launched it, like a year plus ago, basically any single family home today, whether it's detached or semi, can be converted to a fourplex. And a fourplex is effectively 4 units within that building envelope. And in some cases, as this kind of viewer pointed, you can build an additional home in the backyard, often called a garden suite or a laneway suite. It is detached from the main home, but that's how you can potentially get 5 properties on one lot, right? And we're starting to see more of that happen. And yeah, I mean, I follow a few groups as well, and I've kind of noticed a lot of people talking about this and kind of promoting this as like a way to make a ton of money and add value. Listen, I think if someone wants to do this, great. I mean, we need to build more housing. I think the one thing I'd say is, it is such a risky thing to become a builder. And I think from my experiences that the promises or the pitches that people make about how much money you can make, how much value you can add are highly misleading and inflated. I think I saw one person say that they bought a home in a certain neighborhood and they're building 5 units, and within 18 months they've added $1 million in value. And I'm like, are you nuts? Like, if you could add $1 million in value by buying a single family home and converting it into a 5 unit property, everyone would be doing it. And not a lot of people are doing it today because you cannot make $1 million in value just by building a fourplex and fiveplex. And I think the thing that people need to understand is that when a lot of people make these claims, and this is the challenge when you are building, it's when you're building, of course, you have your pro forma, you have your plans of kind of what it's going to cost you to do everything. And it is expensive. It's more expensive to build a fourplex than it is to build a single family home. It is significantly more expensive. Um, but on top of that, for all of your numbers to work, you have to have some projections on how much rental income you are making, right? And like this is I think some of the misleading things that I see where, and I spoke at an event a while ago, that was basically geared towards builders, right? Builders who are building multi-unit housing, builders who are in single family homes. And one of my points was that the stuff that I see is people have a very inflated idea of how much rent that they can get for each unit. You'll see in their pro formas that they're going to get $4.50 a square foot for all of their rental units. Well, that's probably like 10% above market value today, which means they're overestimating their income, number one. But on top of it, they're projecting rents to go up, 5% over the next 2 years. So they think their income is going to be even higher. So again, but we're probably in an environment where rents are going down, right? So, a lot of this is just based on projections of what your obviously construction costs are going to be, but also what your rental revenue is going to be, right? And it's a tough market. So it's certainly, I would not say it is an easy way to make money. It's I mean, I was considering doing this, and there's just a lot of barriers to doing it and a ton of risk to doing it. So you have to, and if you are going to do it as a and the federal government's pushing for people to do this, or pushing people to take on more debt to build more units in their existing homes. You can basically have a CMHC insured mortgage with 10% down up to $2 million if you're adding units to your property. And they're trying to encourage amateur builders, basically. But again, you need to be very cautious if you're doing this. I mean, I would kind of, be very mindful of who you're working with, maybe even partner with somebody who's done this before, because it is a very steep learning curve when it comes to both the construction, the projections, the revenue, all of that stuff. So, I think that's the most that I can say. It's a very risky venture, and you have to have a lot of capital. And you're risking a fair bit by doing that. So I'm not sure. I'm probably not in a position to do that right now. Maybe I will one day when I have more money to gamble, but right now it's a little bit too risky, I find, especially in today's environment where we have a period where it looks like the rental market is softening, right? So I don't know if I would be as comfortable doing that probably in this environment.
All right. There's probably a relationship between the number of surefire exclamations and emojis you see on a Facebook post
Oh yeah.
promoting a really great real estate investment idea. And if there's 10 exclamation marks, you should probably do 10 times the due diligence because it's
You're
too good
right.
to be true, right?
You're right. And this is the funny thing about some of these groups. It's like, you see someone post about how they've made so much money and they've added so much value, and they're like post a comment below and I'll show you how to do it. And you have like 60 people or 70 people like, sign me up. I want to learn the tricks of the trade, right? And like, I don't know, maybe because I've been in this business for a long time, in my head, I'm like, man, there is no like bulletproof strategy on like, adding $1 million in value by building a fiveplex. There is zero chance that it is that lucrative, right? And I'm always, again, my instinct is always, I'm suspicious when people kind of talk about how something's free and easy money, because it was easy money when people were selling pre-construction condos at $1,700 a square foot. And they're telling you just flip it in 2 years and make, or 3 years and make 150 grand. So I'm always suspicious of the kind of the easy money posts. And I think people should be, because those are, usually it's not the case. It's usually not really easy money, especially if you're building in a city like Toronto.
Yeah, and actually, as editor at Move Smartly, I think it's worth cautioning our viewers and listeners that we get a lot of those comments, sometimes promoting schemes, and then about 60 comments underneath,
Mm,
saying, "Oh, I did this and I did that," and that's actually spam.
hmm.
So, in an area where social media is turbocharged now, there's a
Yeah.
lot of fake accounts and generative stuff. Be really careful.
Hmm.
Make sure you're talking to licensed professionals in the city, getting different opinions, real people
Hmm.
before you're signing up for a lot of these, online coaching programs or things like that. You really want
Exactly.
to understand who's behind them,
Hmm.
I would think, right?
100%. Yeah.
All right. Well, hopefully that helps our learner and other viewers and listeners today. Thank you so much, John. I'll just remind everyone again that they can follow you on X Twitter at John Pasalis. The show is there at Move Smartly. And once again, I'll repeat the email if you have questions for our next show. Ask John at movesmartly.com.
Great. Till next time.
All right. Till next time. Thanks for everyone for tuning in, and we'll talk to you soon.